Hi, this is Brent with Trade Therapy recording a quick update, chart breakdown update for Tesla, supporting our Clarity Spotlight on Tesla about a month ago. This is where we left off with Tesla on February 12th. You see that we were watching the development of this impulsive wave structure here. We saw pretty clearly an A, B, but we were watching the development of this and looking for a bounce off of this level, looking for long positions to protect this point in the market structure here. So if we jump over to the chart today, you'll see that we did get that. We did get that bounce right there. But what Wall Street did, what institutions did, and is really not surprising in that we're in a late stage accumulation across the mega cap tech space. The Mag 7 has Wall Street has taken profits. They are reaccumulating their positions. And as we've been writing about in trade therapy content, for those of you that have been following our content are well aware that late stage reaccumulation can get really pretty gnarly. And this is a good example of it here. What Wall Street likes to do in these types of situations in their cycle is they like to create these pivotal points in the chart that can go either way. So, example, this could have been an ABC. This could easily have been a BC right here, and we could have broken up and out of resistance. And so it creates this pivotal point right here where it could go either way. And when it does go one direction, it goes sharply that direction. So anybody and everybody that was coming in along here and thinking that this was going to come out here, they just basically took them out of the trade right here. And this is not surprising given the current market environment that we're in. We're in an extremely headline drama rich environment right now, which Wall Street and institutions love to take full advantage of. And they've done that here with Tesla. So this is the hourly chart. You see that this did develop into a wave four right here. And then they took full advantage of the fact that wave five can be a full impulsive wave structure in itself and ran it back down here to test this point right here in the chart and see if the long positions will defend that area right there. Again, this is part of a larger reaccumulation structure that has been forming within Tesla, and it has been forming for quite some time. You see that price has come down here. It's testing a pivotal uh, level within the chart that has provided support, 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 then resistance, 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 support, support, resistance, support and resistance right here, support, and now coming down and providing support again. So not all that surprising. This also is another one of the reasons why Elliott wave theory is should not be used as a lead technical tool because charts develop over time and because it leaves the opportunity for Wall Street and institutions to create little situations like this that can have big dramatic impacts on price action. So that's why we use Elliott in combination with a lot of other analytical tools, one being Fibonacci analysis. You see that this dropped down to roughly about a 50%, back down to the zero point 0.5 fib level here. Um, if we take a look at this on a larger time frame, we can see how that pivotal area right there is also relative to there's a fib cluster right there. So this at 205.43 is a 50% retracement of this Fibonacci extension right here. Very common for anything that's been on a big run, which Tesla has, to go through a 50% retracement, which it has done. It also came back into the general vicinity of this 4.236 Fibonacci level here. So what we do not see a bunch of distribution candles. We do not see high volumes here. We do not see Wall Street dumping positions here. We do see the development of longer term bullish divergence. We do see a very sharp pullback for wave two here. This is not surprising. Those of you that do study Elliott wave theory know that wave two can be very brutal, can be very gnarly. We are in late stage reaccumulation, not just in Tesla, but across all of the Mag 7. Those of you that have been reading our content should be very well aware of that. So here we are. We have back tested this key pivotal area. We do see longer term bullish divergence developing. We do, when we look at the monthly chart, when we do look at the monthly chart, we see that it has retraced to a logical area. There is a fib cluster supporting it. There is the 55-month exponential moving average also supporting it, and a key uh, uh, support to resistance flip happening at the previous resistance levels. So although it's been a rough ride for Tesla, this does have all the telltale signs of a shakeout. You see a low volume pullback, which we expect to be bought up. We do expect it to find support here. Tesla is due, sorry for all of the adjustments on our chart here. Tesla is due for at least an ABC corrective wave structure here. So there is still a chance that this develops into an A, B, C. That is still a possibility. That's not our primary expectation. We do expect it to find support here, come up, test these moving averages right in here. So 1, 2, maybe a back test of this Fibonacci level right here at 260, and then coming out into wave 3. There is a strategy behind these sharp pullbacks in wave 2. That is institutions wanting to take all of the retail traders out of the trade before they extend sharply into a wave 3. They did not want all of these retail traders that joined the long trade in Tesla in here taking profits into them as they extend up into higher ranges. So this is how they create the path of least resistance. It's all part of the ongoing process of marking up. We are setting, believe it or not, we have not set a new low yet. So we do believe that it's time to move out of this pullback structure and at least come up and have a three-wave corrective move out of this sharp pullback and or extending out into wave 3 from here. So hope this was helpful for all of you that have been keeping up with our content. For those of you that are just watching this video first time, join the discussion, join us at Trade Therapy. I think you'll get a lot out of our analysis and hopefully follow along as these charts develop. I hope that's helpful. I hope everybody has a good day trading.